Before we get started, if you haven't yet watched Saskatoon's How Your City Budget Works, check that out first. In our second video, How Municipal Tax Differs from Federal and Provincial Tax, we saw that the number of people moving to Saskatoon is increasing at a faster rate than the number of properties the city collects property tax from. However, the city still needs to provide services and infrastructure for our rapidly growing city. And this creates a gap in costs that exceed the current amount of property tax revenue. But there are other factors related to city expenses and revenues that also contribute to property tax increases. Let's start by looking at some of the city's expenses. Inflation for homeowners is the annual increase for typical consumer goods like groceries, clothing, and electronics. In contrast, inflation for the city is the annual increase for things like vehicles, equipment, or construction materials like asphalt, just to name a few. Since the city has a very different basket of goods than a typical household, the city's costs tend to experience a higher level of inflation than average consumer costs, especially in a strong economy. This results in increased expenses. With more people moving here, there's also an increasing need for more capital investments in infrastructure, and at a much faster rate, things like new roads and bridges. The city often borrows money to pay for these investments and must repay that debt back over time. And the city has significantly increased the amount of property tax dollars spent to increase our level of services for maintaining our roads, sidewalks, and bridges. Now, let's take a look at the city's revenues. In addition to property taxes, the city collects revenue to pay for expenses from a number of other sources. Revenues from some of these sources are increasing, but they're increasing at a much slower rate. They're not keeping pace with cost increases associated with a growing city. For example, general revenues from Saskatoon Light and Power are increasingly needed to replace aging electrical lines and substations, so their available contribution to the city operating budget is less. The mix of our revenue is also changing. For example, non-residential assessment growth is lagging behind overall city growth. Therefore, residential property owners are paying an increasing share of the property tax. So, as we've already mentioned, the number of people moving to new neighborhoods in Saskatoon is increasing at a faster rate than the number of new properties, creating a gap in costs and revenues. Okay then, let's recap what contributes to property tax increases in our growing city. 1. The basket of goods the city pays for, labor, fuel, asphalt, utilities, etc., are increasing faster than the average inflation rate for typical consumers. 2. The city has increased expenses relating to capital infrastructure, such as road replacement costs and debt payments to pay for major capital required for a growing city. 3. Offering increased service levels for maintaining our roads, sidewalks, and bridges increases the amount the city needs to spend. 4. Other revenue sources are growing more slowly and are not keeping pace with cost increases, and this creates a gap in revenue. 5. Residential property owners are paying an increasing share of the property tax because non-residential assessment growth is lagging behind overall city growth. 6. The number of people moving to new neighborhoods in Saskatoon is increasing at a faster rate than the number of new properties the city collects property tax from. However, the city still needs to provide services and infrastructure for our rapidly growing city. Altogether, these factors give us a good overall picture of why property taxes in our city have increased, particularly during periods of growth. Visit saskatoon.ca/financialfuture for more information.